We're at the low point in the cycle. I think inflation is lower. I think the crypto markets are going to be explosively better this time around. We're also seeing a lot of interesting things like the RSIs, weekly RSIs in Ethereum and Bitcoin are right down at levels that have always seen reversals. We're seeing it with on-chain activity. We're seeing it with minor capitulation. We're also seeing it with volatility. The 30-day realized volatility of both ETH and Bitcoin is at levels that always precedes the large rallies and the big reversals. So I've pretty much got everything in place. Is it possible to get some other down leg? I doubt it, unless something can drive bond yields high. And I just don't see that outside of a temporary blip because one of the inflation numbers or one of the employment numbers is skewed somewhat. So I don't see that happening. So I think we are moving higher. I think ETH based in June, and I've said that for several months now, in fact, since June when I started adding to my positions. The bottom of the cycle is always it's a scam, it's a Ponzi, all the media hates it, everybody throws shit at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there.
Hello and welcome to Crypto IQ. In today's video, Real Vision CEO Raoul gives an update on his outlook for Bitcoin and the crypto markets, as well as why he thinks we have already seen the bottom.
So, where are we in the crypto market? The most important thing about understanding crypto is understanding how to price it. And how I price crypto is essentially two major factors. One is global liquidity, and I use global M2 as the main understanding of that. And then there's and that's the cyclical element. And then there's the technological adoption, which is the long-term logarithmic trend. So let's deal with the cycle first. The cycle is what causes all of the pain. And I've been in this space since 2013, and trust me, I know pain. The first time I bought Bitcoin was at 200. It went up to, I think it was 1,000, then back down 85%, languished for a year or two, and then went up 10x from my entry price where I sold out. And then it came back down again after going up another 10x, then it came back down again. And I've seen these cycles. And at first, a lot of people correlated them to the Bitcoin halving cycle. And I think that's probably coincidental. And it's the fact that the economic cycle works in about the same time horizon, this 4-year period after 2008, that the Bitcoin halving cycle does, because it was born out of the crisis. And really what I think is going on is it's the debt refi cycle, because there's so much debt in the global economy. And what happens is they try and tighten rates, and then you've got to refi all of this debt, and rates come all the way back down again, liquidity comes back. And I think the stasis, the natural tendency is for there to be ongoing stimulus, because a overly indebted economy, and if you think of GDP growth being population growth plus productivity growth, well, with aging populations, that's out of the equation. And it seems that immigration is a political no-go, particularly with real wages so stagnant. So then you've got productivity growth. Now, that's not been growing either. So the only way of funding GDP has been debt. But now it takes $3 of debt to drive $1 of GDP. We kind of get to the end game, and there's just so much debt out there, it never gets paid back. So the only way of running an economy now is allowing for the increase in debt, but what services the debt is the cash flows. So therefore, GDP growth must be higher than debt growth. If not, you need to run negative real rates. GDP growth, because of aging populations, low productivity, has come down too low to service debt growth, and therefore you run negative real rates, quantitative easing, and other such stimulus. So in the cycle, which coincides with the Bitcoin halving cycle, is the global liquidity cycle. And that's the central banks creating liquidity for the markets and for the economies. So what they tend to do is if the economy gets too hot, they tend to raise rates, liquidity comes down, they withdraw liquidity from the markets, take away QE. We've seen this several times before. And what happens is asset prices come down because they need stimulus. So once you take asset prices down, what happens is the economy starts headed towards a recession or goes into recession, and the monetary easing comes back again because that's the natural state of affairs. So that's kind of how the world sets up. And right now, we're in the situation where we've got massive monetary tightening. Now, monetary tightening has brought down cryptocurrencies, not as bad as they were last time, certainly not the majors. I mean, Bitcoin, ETH, they got down to 75%, which is, ETH last time, the last cycle in 2018 was down 95%, much like Solana is now, more on that later. And Bitcoin was down 85%. So we're seeing a less dramatic tightening because there's more people involved in the network, which is the growth of the network is more robust over time. So right now, we are at the bottom of the monetary cycle. Going forwards, we know the Federal Reserve is going to start increasing rates at lower increments. I don't think they go much further than maybe this 50 now. Maybe they try and eke in another 25 and try and keep rates stable and then wait for CPI to fall below Fed funds rates, which I think happens March, April. So I think next year is a game of dramatically changing liquidity conditions. And that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase. And then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention just when they should be looking at crypto as well. Don't forget, artificial intelligence is not really investable for most of us because it's all VC, while crypto is real-time VC that we can trade, which is part of the magic of it. So we're at the blow-up phase, the FTX scandal. Now, I've seen this. I've seen it with Mt. Gox. I've seen it with Bitfinex. I've seen it every single bloody cycle. And this time around, everyone's like, oh my God, it's the end of the world. Yeah, it's every time the end of the world. And guess what? It's not. It's never the end of the world. But I think we're setting up for a super interesting cycle. So I am been buying any money I can find. I'm throwing into crypto, literally in nothing else right now. I'm super focused. So that's where I think we are in the trend. And that's the cyclical element. Where are we in the long-term adoption trend? Well, the adoption trend, if you see this chart of Bitcoin, that's the log trend of Bitcoin. We're 2 standard deviations oversold. We're the most oversold we've ever been versus trend. And we're at the point of global liquidity turning. And we've got, if you believe in it, the halving. It's all coming into place exactly at the same time. Again, really interesting. And here's the long-term chart, log chart of ETH. Same story, right on that big support level. And these kind of things are really interesting. The last time we got the cyclical cycle down onto the logarithmic trend, or to the bottom end of the logarithmic trend, was 2018, December. November, December 2018, we saw that puke, the final puke lower, which I think we saw in Bitcoin in October from the FTX, and I think we saw in ETH in June. What happened was that's when volatility came to the low and the market started picking up. That period, as soon as the Fed pivoted, was a complete change in markets. 2018 had seen the kind of falls we've seen now, about 20-30% falls. It was sharp, it was nasty, everyone was terrified. And then what happened was the Fed went, okay, sorry, yeah, we can see the economic data is falling apart, inflation's coming lower, so we're going to stop. And I think the S&P did about 15%. I think oil did about something similar. And then the NASDAQ did about 20. Exponential age stocks, the growth technology stocks, did about 24%. Bitcoin in 9 months did 300 or 400%, as did ETH. So these were staggering gains that came out of that environment. I've always referred to it like a beach ball being held underwater because the adoption trend is still there. What's fascinating about the adoption trend this time around, particularly in ETH, is the volumes have remained reasonably high. The number of active users has remained high. The total value transacted, which is the other part of the Metcalfe's law equation, has actually come down as the price of NFTs has come down. But the other measures look like it's robust. 2018, we saw a much larger fall in daily active users because it was earlier in the network adoption phase. But this time around, we get to build on top of what we built on from the last cycle. So that makes me very constructive overall. So here we are in the long-term adoption cycle where Metcalfe's law kicks in, and this is the thing that drives the exponential gains. Every time we get to this situation, we get new highs within about 18 months, maximum 2 years. In fact, within 3 years, even if you bought the 69,000 high, in 3 years, you'll see it go through. That's how it's always worked. Would it work this time that way? I don't know, but probability is there because of this network adoption trend that we're seeing. So I'm expecting 2023 to be a decently good year and 2024 to be extremely good year. If you remember, I said inflation, I think, goes negative. So therefore, we will see much more stimulus and growth will remain somewhat sluggish. So I'm again excited about where we're going to go. And we will go from 300 million users, and next time around we'll be at 1 billion users. And that trend rate of adoption just continues higher.
So do you agree with Raoul on his outlook for crypto in the coming year? Let us know in the comments. Also, don't forget to like and subscribe. Thanks for watching, and we'll see you in the next video.